Okay. Good afternoon, viewers. This is your tutor again, CPA Charles Cafe, and today I'm going to take you through the inventory valuation, and we are going to take a practical question, and this question is from CPA, that is Cost and Management Accounting, question 2, level 1. It is question 2, part B, May 2019. That's what we are going to be looking at, and we are going to find out how we can value our stock, the stock we have in the store. How can we value that stock, especially when we are issuing some stock out and when we are buying out some, we are increasing our stock. One of the reasons why we want to look for this value for the stock, or why do we really want to know the price at which we are costing these inventories we are receiving. One, we want to know the figure for the closing stock, and that closing stock, as you know, in our financial statements, you know that closing stock, if it is finished goods, then it will be going for income statement and the balance sheet. So we need to know what will be the figure at the end of the period that we shall be having, so that we can transfer that into making other preceding documents or financial statements. And the other thing, the one we need to, why we need to know the thing, we need to know we are costing those items at what price. If we are issuing them out, are we using first in, first out, or we are using last in, first out, or we are using the average costing method? Those are the things we are going to be looking at. Today, I decided to pick a very simple question, but just note it's very simple, but it is a standard question. So I picked that so that it can help us to understand how we can go when we have other complicated scenarios. So this one is just acting as a basis or a foundation that will help us to handle where we shall be seeing other complicated issues, like having returns on purchases, returns on issues. When we issue out those goods we've returned, so we are using which price. So I use this as to make sure you get a foundation that can help you really understand and make sure you can analyze as we go further. Because when I do this, I'm going to start with Fifo, because the question is saying they're asking for Fifo. The company is using Fifo. So when I finish this, we may use the same question to see the other formulas, or we may select a different question and we use other methods. But as we know, when we are doing inventory management or inventory valuation in cost and management accounting, our emphasis is to look at all the three. It's not like in financial accounting, whereby when you are looking at those inventory valuation methods, we only consider the FIFO and the weighted average, because the other one of LIFO doesn't recognize the IS2 of the inventory management. So when we are doing cost and management accounting, we are taking everything, because for us here, we are not following the IS2. So allow me proceed and we'll go through the question so that we can analyze each and everything. The question says, Tase Juice Uganda Limited located in downtown cities of Kampala, is the leading producer of fruit juice in the central region. TJU buys a variety of fruits from Owino market, such as oranges, pineapples, and mangoes. Now you see these oranges, pineapples, and mangoes, those are the raw materials they use in the manufacture of that juice, which are supplied directly to TJU's store. The fruits are then processed, packed in different brands, and dispatched to the shops and supermarkets where they are sold. On 31st March 2019, the store ledger card showed 350 kilograms of fruits in the store, valued at shillings 4,500 per kilogram. This date they are giving us, it is the date of the previous period. Remember, our period, the one we are computing starting from, we are looking for the closing stock of 30th April, that is 2019. But what they are giving us, this was in March. It means this one, which was the closing stock at that time, it will be our opening stock at April 1st. It will be our opening stock. So the opening stock units, they are 350 kilograms. They are valued at 4,500 per kg. The company uses the Fifo, that is first in, first out method, to value the inventory of raw materials. The following information relates to the fruits received and issued during the month of April. So we are seeing what we have: a table, we have the purchases, we have the issues. So what we have here is that since this is a raw material, this is not finished goods, it's raw materials, meaning that these are the raw materials we are going to put into our production so that we can produce the juice. So they gave us the purchases, the date, quantity, the cost. Now you're seeing here they have given us the quantity in kilograms, but they have given us, this one is a total cost, because they have given us cost, meaning it is the total cost. It is in thousands. That's why you are seeing these zeros up. The zeros up, they will be part of these figures. So it will be like for the first one, it will be 1,380,000. So they've given us the date and the quantity. So required, they are saying prepare TJU's store ledger card and determine Roman 1, the value of closing stock as at 30th April 2019. Those are 14 marks, you see. So those people who are fearing CPA, I'm telling you, the things are passable and people pass it. So you just need to concentrate. Don't skip anything, because even those theoretical aspects you see, they are asked and people can get a lot of marks out of there. Then the part Roman number 2, they are saying the direct material cost charged to the production. Here they are saying the direct material cost charged to production. So what we want to find out, what was the cost of those issues? Leave alone what we've purchased, but what is the total cost of what we issued in the production of juice? So when we are trying to look for these direct material cost, it will be the cost of these items we issued out, the total of it. It will be our raw materials that are consumed in the production. Hope you've wrote the question. Allow me kick off. So I had organized something here. We have to start with our heading, and our heading is going to be Tassages Uganda Limited. Then we put what we are preparing. We are preparing a stores ledger account using Fifo method. Using Fifo method, they have given us when we are supposed to prepare that, because when you see here they said as at, that's why I did not say for the period ending or ended. I said exactly what they told us to do in the question, as at 30th April 2019. So we are going to be having, this is how our store ledger card or our stores ledger account is going to be looking like. It will be having what we are receiving as in terms of the purchases and what we are giving out to the production department, because those were just the one we are receiving, they were just raw materials. So what we are giving to the production and the balance that is going to be remaining. Those are the most important things which we are supposed to put. We must be having a purchase, we must be having an issue, and we must show the column for the balance. The reason why we are showing this, we are showing how much we've bought, we are showing how much we've issued out, and what is remaining. Those are the things we know or we need when you are preparing the store ledger account. So when you are using Fifo, the difference is only in terms of which raw material is going first. Fifo, as the name says, first in, first out, it means what you receive first is the one that is supposed to be issued first. If let's say you receive a batch of 10,000 units, and that 10,000 units you've received, we make sure when you are issuing out those raw materials, we make sure we first complete the 10,000 before we go to the next batch. So that's the main difference with the others, as we shall see. Okay, we can start. Here we have the date. This shows when the transaction took place. This is a particular shows what we did, if it is an issue, if it is a return, if it is a purchase, everything goes here. This is a detailed section where we put our narrations. Then the units, of course, those are the units. They are in kgs. They told us they are in kgs. They are in kgs, so can adjust this one a bit so that it fits. Yeah, we can even adjust this one a bit. Hope it's okay. We have the unit cost. This is the cost at which we are receiving those items. This is the unit, the whole total cost, as we go on with the balances and whatever. Because what we want in the balances, we only want the number of units that are there and their amount. We don't need the unit cost. But other people, you may find, or other books, you may find when they have put the unit cost in the middle of the balance, the units and the amount on the balance side, but it's not needed. We can start off. They told us we had a balance, so a balance comes as a balance, not a purchase. We can start with our date. We use the format of financial statements. We say 2019, since the period is not changing, we can maintain and we say April. It's only the date which are going to be changing. This is April 1st, 01. Then our details, we have balances. They told us those are balances. That's what we have at the beginning of the period. Balance blot, you can put even blot down. Balance blot down. Allow me use that shortcut. Then these are not, we are not purchasing, but we just have the what? The balances. They told us the units were 350 valued at 4,500. The units are 350 valued at, we can try to compute the answers here. It will be equal sign. You start with the equal sign, these units times the 4,500. So it is giving us that. So our cost is going to be 1575 triple zeros. I'm not excluding the zeros. I'm just using all of them as they gave us. So you've seen how we got that. Then when we go to the second, I'm just going to put second. We had, what did we have? We bought. We started with the purchase. On first, the date, we did not have any transaction except the balance we had. Then on second, we had 300 units. These 300 units, they were all at 1,380,000. It means we have to look for the unit cost by taking the cost, the total cost divided by the number of units to get our unit cost. It will be, they said 300 units at 1,380,000. We have purchases. Units, they are 300 kgs. That one we are not given. They gave us 1,380,000 as our cost, total cost. So if you want to know the unit cost, you get this divided by this, meaning it was valued at 4,600. But when you make purchase, make sure we are adjusting also the balance side, because the stock is going to be increasing. We say equal sign this. If it is increasing, we add. If it is reducing, then we're supposed to subtract. But this one, sorry, I've added the wrong one. It's supposed to be this. We are adding units plus these 300 units, which will give us 650 units. But these 500, they will be valued at equal sign this plus this, the amounts. Then we go on. If there is a transaction on 3rd, the next transaction happened on 8th. We issued out 400. On 8th, we had an issue, issues of, we issued 400. But remember, we issued 400, but since we are using Fifo, we said Fifo recognizes the first transaction. They are the ones to be completed first, then we do the other one later. It means we are going to first complete the balance we had of 330. So we are going to first complete the 350. That 350 is going to be valued. They gave us our, say, our cost. The unit cost was 4,500. Then the amount is going to be this times this. That will give us that. That will be our cost. then we have to reduce, since we are issuing out, we have to reduce the stock. The stock is going to reduce by what we've given out minus the 350, which will remain, meaning we shall remain with the 300. Then we have also to adjust the cost to be this minus this. These 300 units, they are valued at this price. So remember, we issued out 400, and we've first issued out the 350, meaning there is a balance of 50 units. Now these 50 units, they are going to be part, since the first batch is complete, so we are now going to go to the second batch. The second batch, we bought 300 units. So if we bought 300 units at 4,600, it means on that 300, we are removing 50 units at a value of that. Then this one, the cost will be this times this, and it will give us that. So we have to reduce also the units to be the 300 minus the 50 units. We have also to adjust this by saying that amount minus this. So it will give us this, meaning this 250, they will be valued at this. But this closing stock we have at as per this date is part of the last stock we have, or the last batch we received. So that's, we are done on that on 8th. Let's go to the next transaction, which happened on 13th. 13th, we purchased 500 units at 2,350,000. On 13th, we purchased, those are purchases of, sorry, it's supposed to be here, 13th. These are purchases. We purchased 500 units at 2,380,000. Hope it's the one. Let me first delete this. Is it 2,380,000? It is 2,350,000. This is 50,000. So this one is supposed to be here, 2,350,000, because it is the total cost. Then you have to get the what is the unity cost. The unity cost will be this divided by this. It will be valued at 4,000, because when you multiply this times this, you must be getting this. So we adjust our balances. Since we have purchased another stock, it means now we are going to be increasing the stock. We add that, the 500, we are adding the units to go to 750. Then we also adjust the cost. It will be this plus this. It will be that. Then we are done on 13th. So let's go to the next date. The next date is 14th. Make sure when you are doing this, you follow the dates. Don't do the number. Let's say you do the number, you do on 2nd, again you go on 14th. You have to follow the date. So we go on 14th, we issued out 350. This 350, it happened on 13th. This is an issues, but we said we gave out 350. Remember, if these 350 were there, because we stopped issuing out when we had reached the second batch, and the second batch had only 300 units. It means, but on these 300 units, we removed the 50 units which we first issued out. So we remained with the 250. This is what you are seeing here. So we have to first issue out that 250 first, and we are issuing it at the same purchase price that is on the second batch. the cost will be this times this, which will give us that. Then we have to reduce also the balance here. It will be 750 minus the 250, which will give us 500. And we have also to reduce this minus this. So if we had given out the 250, but remember we are supposed to issue out 350, but we gave out the 250. It means we are remaining to issue out 100 units. Those 100 units, they are now going to be valued at the preceding unit cost of the batch. That's why we've been calculating this unit cost to help us value when you are issuing out some stock. It will be 4,700. So when we multiply, it will be this times this, will give you that. Then you less also the stock, this. Since we are issuing out, stock is reducing, and you add just also the cost, that minus this. So it will be that. That's what we are supposed to do there. Then we go to the next. The next date is this is 14th. Now we go to 20th. 20th we purchased units, 400 units at a total cost of 1,860,000. 400 units at 1,860,000. This happened on 20th. If it happened on 20th, it was a purchase of what were the units? They were 400 at a cost of 1,860,000. 400 units at a total cost of 1,860,000. So we check what will be our unit cost divided by this. That will be our unit cost. So we adjust our balance here. It will be this plus what we've purchased these 400 units. Shall we go to 800 units? We adjust also the total cost. It will be that plus this. That will be that. Then we'll go to the next date. The next date is 22nd, because this one is 24th. 22nd, we issued out 650. We issued, it is 22nd, we issue this, these are issues. We issued out 650. But remember, these 650, we are supposed to first complete the stock we had on the third batch we bought, which came on 13th. It means that batch we remained with only 400 units. So we are supposed to first issue out the 400 units. And when those ones are done, then we shall check the other one. So we first issue out the 400 units, but we are issuing them at the cost of the third batch. According to that, this times, sorry, cosine this, multiplied by the unit cost, and it will give us that. We reduce the stock because stock is decreasing, so we have to adjust that to remain 400. Then we have also to adjust our total cost. We remove what we've given out and we remain with what is remaining. So we have given out the 400, but remember we are supposed to give out 650, but we have so far given out the 400. So we are remaining, sorry, we are remaining, because we said whenever we are starting a formula, make sure you are starting with an equal sign. That's why you've seen it was not coming. We are supposed to give out 250. This 250, when you add to the 400, you'll be getting the 600 and the 650 that was given out. So, but this one, since we completed this units, so we are, these 250, they are going to be part of this. So they will be valued at this cost of 4,650. So what will be our total cost? It will be this times this. Let's enter. And we have to add just also our stock by, since stock is reducing, we have also to reduce the number of units. Sorry, this. Even this one, cosine this minus cost we are issuing, so we remain with that. That one will be done. Then we go to the next date. The next date is 24th. We are purchasing. On 24th, we are purchasing 360 units at a total cost of 1,728,000. 1,728,000. We are the units. This is 24th purchases. We are saying the units, they were 360 at a total cost of 1,728,000. Is it that? 1,728. 1,728. Yeah, it's that. Then we get the unit cost. It will be cosine this divided by this. So adjust our balances. It will be cosine this plus this, the number of units we have purchased. We have to increase our stock value plus this. So that one will be done. We go to the next one that happened on 25th. We issued out 260. On 25th, we issued out. This is 25th. These are issues. We issued out 260. But this 260, remember, this fourth batch, we had completed only, we had remained with 150. So it will be the 150 that we shall first issue out. Sorry, it will be the 150 that we shall first issue out at a cost of 4,650. So it will be costing us this times multiply by this. It will be that. Then we reduce the units. It will be this minus this. So adjust also our total cost. It will be this minus what we have given out of this. Will become to that. But remember, we are supposed to give out 260. We issued out only 150. So the balance, sorry, the balance is 110. This 110 is supposed to be deducted from the preceding batch, which was purchased on 24th. It will be valued at 4,800. We cosine this, multiply by this, enter. Then we can also adjust our units, because we are reducing the number of units. We less. When we less, we have also to less the cost. We remain with the cost, the actual cost of the goods that are still available in the store. That one is done. We go on the next day, and the next day is, this was 25th. Then we go to 26th. We have again an issue, because this is 27th. First finish this one. We are issuing again 100 units on 26th. we are issuing again. These are issues. We are issuing 100 units. But remember, in these units, we said we had a balance of this. This batch was completed. So on this batch, which was purchased on 24th, the 360 will move only 110. It means we can still issue out because stock is still there. This minus this, we are still having something. So we are valuing it at the same. So it will cosine this, multiply by this. Press enter, then we'll adjust our stock. Since stock is reducing, we have also to less minus this. Cosine this minus this. So we've remained with that. Then we'll go on the next date. The next date is 27th. We bought 320 units. 320 units at 1,488,000. 1,488,000. The units are 320 at a total cost of 1,488,000. These happened on 27th, and these were purchases. So we want to know the cost. Let me hope that the figure is 1,488,000. Yeah, it's the same, 330. To be cosine this, divide by this to get our unit cost per each. So adjust our balances. Since we are purchasing, now we are increasing our stock by 320. It will be that, it will be 470. Then we increase also, we value our stock at the right price, that. Then we go on the next date. That one is done. The next date is, we finished this, it is 28. Again, we are purchasing. We are purchasing because this is the 28th, this is the last one. 28th, we are purchasing 200 units at 984,000. We are purchasing 200 units at a total cost of 984,000. So these are purchases. Purchases, they happened on 28th, and we need our unit cost. It will be this, divide by this. We add just our stock, cosine this plus this. We add just also our total cost. It will be cosine this plus this. So we go on the last one. The last transaction took place on 30th, and we issued out 300 units. It was on 30th because our statement is ending on 30th April. So these are issues, and we are issuing out 300 units. There are 300 units, the one we are issuing out, but we said these units were still there. The one we bought on 24th, we issued and we remained with the 150. So we are going to first issue out that 150 at a cost of this, the 4,800, and we make sure we have cosine this times this. Then we adjust also our stock. It will be this minus this. So it will be cosine this minus this. So we issued the last one because they were supposed to be 300, so it is 150 plus 150. But this one is going to be valid at our next or preceding batch, which was bought on 27th at 4,650. So it will be cosine this, multiply it by this, get that. We add just our stock, it will be cosine this minus this. Say this, enter. So we add just this one by saying cosine this minus this. So our closing stock is going to be this. This is the figure for the closing stock. The closing stock in units. This is the closing stock in units, and this is the figure of closing stock. And here, the closing stock, we said closing stock is equaling to 370 kgs at 177 for 500. Those are in shillings. How do you can prove, if you want, you can prove that. Remember we said using Fifo, we said that this stock you are seeing, the closing stock that is going to remain here, is part of the stock or of those recent purchases we made. Meaning, if on the purchases we bought on 23rd, on 27th, the 320, we issued out only 300 and we issued out only 150. It means the 320 minus the 150. Sorry, I put a cosine here. It will be this 170. This 170 is going to be valued at this 460 because it is the number of units that are remaining here. They are valued at 4,650. So if you want to get the total amount, it will be cosine this times this, then we get that. That will be the cost of the item that are remaining here, plus our 200 units which we bought at 950. If you get those number of units, they were 200, because for them we did not issue any. They were bought at 4,920. When we try to multiply, it will be cosine this, multiply it with this. It will give us that. So if you try to add this plus this, you must be getting this total. So it will be cosine this plus this, which give us exactly the same figure which we are looking for as this. Hope you've seen how we got that. That's our figure. This was just proof. Put proof. Yeah, that's how we prove this. This is total. So that's it. And the other preceding question asked us to get this was given 1 mark, direct material cost charged to production. We said those are the ones we issued out. So we can come here and we say sum. If you're not summing, you can just say equal sign, we add it manually, This is our issues. These are our issues here. This one from here to here, this is our issues. These are the issues. So we want to get the total. It will be this plus this plus this plus this plus this plus this plus this. I'm just doing it manually because I want you to be following what we are doing. Plus that plus this plus this last one. Press enter. These are the units we've. These are our direct materials consumed in production. Allow me use that for short form. That's that. So that's it, and the question is done. Maybe we can try to put a little bit some borders so that the work looks a bit fine. Can stop there and just put from here. We put all borders. You can even try to put some comma with the separators. If you want, you can even put in the shillings inside, but since we had put it up, it comes very fine. Those are the 15 marks. I hope you guys have got that. Then when we meet for the last in, first out and the other weighted average, I'll take you through again other steps where we are having returns on purchases, returns on issues, and when we are issuing out. But at least I want you to first get the basics. Thank you for today, and God bless you.